Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, on this smashing Saturday for another daily cryptocurrency market update. We only have one tab in front of you, and what we're going to be doing today is just looking at the charts and asking ourselves the question, do the charts fit the narrative, the mainstream, the doom and gloom that's out there? And my answer to that quite simply is no. You guys will know that we've been bullish since the start of the year. We were bearish all of 2022 pretty much, and kept people out of the market. But there were periods in that downtrend where you had resistance of the trend, or you had a pushback of the trend. You know, like here, for example, when we got out. And then, of course, on the way down, every time there was a rally against the broader downtrend, the sentiment changed and people swapped and changed their positions. And the reason being is because they're paying a lot more attention to the narrative than what the charts are telling you. The charts are the truth, ladies and gentlemen. And I would wager that somebody trading the charts will destroy somebody who's trading the mainstream news narrative. Because what are you looking at when you're looking at the charts? You're looking at price action. You're looking at people's positions. You're looking at people's thoughts throughout the charts. They paint a picture that you do not get on a biased, untruthful, having to make sales and again interaction media source. If you look at the media and what that tells you, or you look at the mainstream news outlets when it comes to the markets and certain things, if it's big news in the financial markets, people are privy to that information, and what do people care about more than anything, really? Money. People will protect, position, and play the markets if they've got privy information before retail gets it. This is why the charts are the truth. And if you look at the charts right now, I believe they paint a very different picture to what the mainstream narrative, crash, this is going to be the worst recession ever, you know, the debt ceiling, the banking crisis, everything's going kaputs. The charts don't tell me that at all. And if you look at where Bitcoin, the SPY, so the NASDAQ, we'll use them as examples, and gold are, which you can broadly sort of term as risk, they're all at resistance, whereas the Dixie and the yield market is at support. And you're getting that play out, and the news is attracting that. So it was all very hunky-dory and bullish. Then all of a sudden we run into this key level of resistance, and then the news outlet changes based on the price. So it's the news. Show me the charts and I'll tell you what the news is. And that's exactly what you're getting play out right now. But actually, and this is why we're just going to look at the charts, you know, we ultimately took a position back in the markets at the start of the year after being out for 2022. So we're not one-sided. I'll take both the bull and the bear side. And we actually made some great shorts, like Luna. We called Luna short. We called loads of short. Room was a fantastic short, so on and so forth. But ultimately, if you look at the charts and you compare that with the narrative that we've had this year, which has been pretty horrific, you know, war, so on and so forth, Bitcoin is up 70-something%. The S&P is up 17% from November, which Bitcoin didn't appreciate from because of the whole FTX spill. And I actually think if we didn't have the FTX spill, Bitcoin would be a lot higher. It's kind of lucky almost that we had the FTX spill for me last year, because we were still bearish during this rally. If you didn't have that, and you look at what actually the markets did, like the S&P, which we should have been in line with, but we weren't because of FTX, Bitcoin likely would be at 40-something K by now. However, it did hinder it. But I still think it's going there. Talking about the charts, you know, where are we at? And we've drawn all this. 30K was key resistance, foretold on this channel. Very significant. 30K is a nice big round number. You've also got a lot of price action here. And of course, you've rejected off of it. It's like, you know, doing that high jump or jumping over a hurdle. You don't just want to jump parallel to it. You want to take a run back and then you'll clear it. And that's exactly what I believe Bitcoin is doing right now. But it's not just Bitcoin that's at this resistance level. And bearing in mind, narrative right now is horrific. You know, Bitcoin went 89% up at one point, and still today is, you know, 64, if you want to take it from the start of the year, percent up. Does that fit the narrative? And does this look like what people are saying in regards to a crash and stuff like that. If people thought a crash was coming, and we're talking about big investors, smart money, would this look like this? No, because people would have got the hell, they'd have got the hell out of there already. You would have seen exit liquidity take place. You would have seen a lot more of a drop and a lot more than this. This does look rather toppy, but so did this, and we stayed bullish throughout this. I had everybody turn against me down here. And if you are a Patreon member, you can attest to this. We were buying this dip up when everyone else was listening to the news and bearish. And it's proven to be the right thing. And we're saying the same thing today, ladies and gentlemen. Could I be wrong? You bet. You know, I've been wrong. And part of being a trader and investor is being wrong. And actually, it's more of an important part than being right. Because if you think about losing money, if you have $100 to play in the markets and you lose 50 pounds, half of your account, which if you're trading leverage, by the way, is extremely easy to do, then you've got to get 100% back to just get back to where you are. But that's for another story. But if we look at Bitcoin, I think it's doing very well. And I think this is healthy. I think a retest of the neckline is potentially on the cards. But ultimately, I think this could lead to continuation. You don't have to retest that neckline. We saw a nice buy up here. You know, this could turn around. Ultimately, the dips at this point, even up here, so we've got some very nice entries across the board. I'm still DCAing and buying crypto in the belief that, you know, and we think we've done the analysis on this, rates going sideways is going to lead to markets doing well. And we've looked at the prior 3 times that this has happened. And if you look at what happens with rates going sideways, go and look at what happens to the S&P. It typically goes on to put in a new all-time high. And actually, you've not just got Bitcoin at the significant resistance. You also have the SPY, which we've done lots of analysis on. People think I'm crazy because I'm essentially calling for the potential for new all-time highs for the SPY. The narrative that's out there would lead you to believe that that is impossible during this kind of an environment. How can it possibly be? Look at credit, look at the mortgage market, look at the war, look at the debt ceiling, the banking crisis, so on and so forth. But actually, you know, if you look at where things are, look at the yield, take the yield curve, for example. That point of uninversion, look at what happens from that point of uninversion to the point where a crash happens. What do the markets do in that time period? You could be waiting for a crash that could be 12, 24 months down the line. Could be 6 months down the line. I'm not 100% sure. But ultimately, we believe that you're going to have this sideways period for rates. And we can do the analysis. If you want the analysis, we've done it plenty of times. We'll go through and just do a specifically interest rates in the US relating to markets analysis video. Let me know in the comments if you want that, guys, because I'm more than happy to do that. That's our macro assessment. But look at the S&P. You've got a similar thing here. You've got like this head and shoulders that would give you a new all-time high upside target. Again, what's it doing? Similar thing to Bitcoin. Key level. Key level. And you're kind of flipping it. You also had a kind of head and shoulders vibe here. You know, Bitcoin's doing the same thing. And you've also got, and talk about trendline, neckline retests. Look at that. So still on the cards for Bitcoin to do 25K. Altcoins would do significantly lower. I think altcoins are at amazing prices. You know, look at some of your risk markets. Again, you've got a similar thing with the NASDAQ. NASDAQ's further behind because it's more of a speculative beta. So it's still a lot more down than the likes of the S&P. But look at the narrative that's out there, and then look at Apple. Apple's nearly at new all-time highs. Look at the Dow. Let's pull the Dow up. I'm here to help. You know, I'm not necessarily trying to push my bias on people. I'm just here to give it and tell you why I think it. And then you can go and listen to the people who disagree with me, which you should always do. Don't listen to one side of the story, listen to both. You'll make a far better judgment call if you have both sides of the story accounted for, rather than if you're just one-sided, because then you leave yourself open to being wrong, and then it's your own fault if you've not listened to both sides. But look at this, similar thing. Look at what you're doing. Does this rally, and people are just calling this, oh no, this is just relief. Relief? I mean, considering everything going on, you know, The Dow Jones only 7% down. What's the SPY? Nasdaq will be a lot more down than the likes of the Dow Jones. The SPY will be down more than the Dow Jones, and then the Nasdaq will be down more than the SPY, and Bitcoin will be down more than them all, as you've got this kind of beta tier, if you will. Look at gold. Look at where it's at. People are praying that this is just a relief rally that's going to lead to lower lows. And I can see why they think that, because of the narrative. The narrative is so bad. But we're saying, and we've said since the start of the year, okay, we ultimately think that there's a driver behind markets, which is liquidity. We think the markets are forward-looking, and that they don't. If you look at a market's price, it's not on what's happening today. It's on where it's going to be down the road. This is the whole concept of speculating, and this is how markets work. Yet people only want to take the news that is at the present time. That news will change very quickly. And this is why I literally get a complete rebellion on my hands every time there's a, being bullish this year, I've been turned on at every point here. I got turned on here, which was crazy. I got turned on here. I definitely got turned on here. We got turned on here. And we're definitely getting turned on now. And people are saying, oh, well, maybe not. Well, I'm saying, ignore the news for a second. This isn't unhealthy at all. The fact that bears are claiming victory after being bearish from down here and getting wrecked, you can claim victory once you go on and put in a new low. Then you're right to be bearish. And that's you having made a correct assessment of the market and me having made a wrong assessment. I'll always hold my hands up. Any analyst worth his salt will understand that he can be wrong and accept that. If you don't accept that, you're going to have a very short-lived career. But I think the markets are telling us something very different to what is actually going to happen. And I think the reason, if you didn't have a Fed and a fiat system, which is what everything is valued in, that was such a damn joke and a Ponzi scheme, I would agree with the bears. But what has their response been to the banking crisis so far? We'll bail them out. People are talking about the debt ceiling right now, and they're saying this is why the markets are going to crash because the US is going to default. If you think the US is going to default, you don't understand the system one bit. They don't need to default. Go and look at Brad Shermer the other day saying, crypto bros just print money out of thin air. So do we, but we're the US government. Go and look at all the Fed members that have said, don't worry about the Fed default and we've got an unlimited amount of money. The same money they make you give the best years of your life for, the most amount of time for, they stress the hell out of you for, they tax you for, and completely control your life with, that they just completely control and manipulate. And this is why I'm bullish on the markets, because I am bearish on the fiat systems. Yes, people run to the dollar in times of panic. And that still could be something that plays out. I just don't think it's here. This dollar looks good, by the way. I love a double bottom. That's one of my favorite patterns to trade. But the dollars, this is what you've got going on, right? Support, whereas your other markets are doing this. So as the dollar's gone up, your other markets have done this. And then as the dollar's gone down, your other markets are doing this. And now, dollar's getting a bit of support, so the risk market's doing that, and this is what's happening. I think this is the eventuality and what you're looking at moving forwards. Look at the FTSE. That's a double top. FTSE loves this double top sort of pattern, though. There's a lot going on. Gold's nearly at new... look at this. I'm on a daily here, but let's just take this to the weekly. I'm bullish on gold, which means we're bullish on crypto. I'm bearish on the dollar. I think you've got an incompetent Federal Reserve. And I think if you look at the main driver for markets, it's rates. Look at what happens under sideways rates. But this time is going to be different because this is happening, this is happening, this is happening. Okay, well, if it is, let's let that play out. Let's see what we're looking at. Altcoins also at resistance, having rejected in a more higher beta fashion. Total market cap. The total market cap is something I love to look at because it just makes me so unbelievably bullish. When I look at the fact that we're at $1 trillion in terms of a market cap and you grasp just how big of a deal blockchain and crypto is, it's just a pretty picture that gets painted for you, in my opinion. And we are actively looking to accumulate cryptos here. And some crypto-related stocks. If you want to find out more about that, please do consider joining the Patreon. It's not for everyone. We only want people that want to be there. You know, it's very interesting to me, everything that's going on. Grayscale GBTC, same thing. Look at that resistance. Very significant. You've ran up, you've closed that gap. As a derivative traded platform that isn't open 24/7 like the crypto market, and you're rejecting. You may find that support. We'll see. Look for Grayscale as a kind of lead indicator. But ultimately, guys, you know, I think the charts are painting an extremely different picture to the narrative. And I think if you're going to trade the narrative and you're going to chop and change with it, that's the problem with the narrative, is it chops and changes. You're going to have a very hard time as an investor. During this pullback, we're very calm and collective. We know when it's time to admit that we're wrong and go, okay, we're wrong, we're going to have to take that hit. Now is not that time. This was all planned for and prepared for, and is ultimately viewed by me as an opportunity, believing that, or assessing that there's further upside ahead for not just crypto, but risk generally. And one of the big reasons I think that is because I'm just, you know, look at the SPY, right? Look at the narrative out there right now that's been going since November, but certainly recently, how terrible everything is. This is the NASDAQ, sorry. Look at it. Does the price reflect the narrative? Look at the SPY. It's bad out there, but what's this telling you? Apple, Microsoft, again, being the kind of stronger. Look, you got this DNA across the board. Some are just further along that pattern than others. Amazon, I think, looks like shit. I'm bearish on Amazon, by the way. And actually, I'm also bearish on oil, which is a similar setup to Amazon being so consumer driven. Oil's very consumer as well. Look at oil. You know, remember, it's all about inflation. And look at some of these horrible, I mean, look at oil. I'm happy to be wrong, guys, on being bullish. I'm happy to take the criticism that comes with it as well. Certainly when everyone's so bearish, but time will tell. And people do say, okay, well, there's bullish YouTubers out there, like these big channels that, I mean, I'm not going to go there. But they've been bullish permanently, you know. I don't believe that the majority of investors should try and time the market, because I don't think people have the time to do that. And I also think they don't have the mental capacity. The majority of people, right? Some of you definitely do. I think what you want to aim for as an investor is capturing the big trends. Like us getting out during this bear market. Not perfectly, by the way. We got out here. Literally on this. So 44K was roughly where we got out. And then we got in on the 5th of January. I didn't get that perfect. And I watch these markets every single day. Maybe that's because I'm not an amazing investor. Who knows? But ultimately, I think that this is now a broader trend that you're going to see take you to the upside. And that's despite everything going on. We do believe and assess that there is a demand destructive event on the horizon. The yield curve is predicting that. But it doesn't typically play out until point of one inversion, which ties in with our sideways interest rates into a pivot, which is bearish. And that's likely going to happen as a result of whatever the yield curve is predicting. But during that, up until that time period, we think it's going to be a decent time for the markets, despite the narrative. Let me know your thoughts, comments, and concerns in the comment section. Please do not take this, if you are bearish, as me putting anybody down, because that's not what I'm trying to do. I take and 100% applaud anybody that tries to work out what the markets are doing and have a bias on it with conviction. But just ask yourself the question that we started with at the start of this video. Do the charts match the sentiment? You've ran it into resistance. You were always going to get a pullback. You were always going to get resistance at resistance and support at support. Treat that for what it is. There's levels that you look at where you can go, okay, this is going to become more than a pullback now. And actually maybe that this was just a relief rally. We're nowhere near there yet. And actually Bitcoin and a lot of other markets have shown us what's going on. And people talk about smart money concepts, which I think is very important. You know, there's some great people that talk on it, even in the crypto space. But what's smart money doing? What are the charts telling you that smart money's doing? I don't know. You tell me. Let me know in the comments. On that note, guys, I'm going to love and leave you. Have a fantastic Saturday and see you in the next one.